We are going to briefly narrate how to fill out your business valuation fact finder. This is information unique to your company, your business, and these are things we need in order to complete the process of creating a valuation report, a unique report to you, and this is sort of where the process starts to create that and to gain that insight and understanding that I think will really help launch you as we continue to work at this process together. So some of these forms or fields in here in the fact finder are obvious and don't need explanation, but the first one that I'll point out, I'm going to go through this top to bottom and point out and give a little bit of narration and explanation to several of these items. The industry code, or NAICS, it's commonly going to be NAICS. If you have an SIC code, that's more of an antiquated code in the system that's not really in use anymore, but we can still make use of it. And but a NAICS code will be found if you're not familiar with what it is. It's an industry-specific code that is going to identify what your company does. We'll review that as well if there's some possibility that it may have been recorded wrong or misidentified. We want to uncover that because it can and does affect the value of the company. But NAICS is a standardized industry code, and like I said, it's on your tax form, depending on what tax form you use. If you're not sure where to find it, just ask. This would be the headquarters, as it says here. If you have multiple locations, some businesses that are in retail and other industries, other types of businesses may have different locations in different places, but this would be the headquarters, so city, state, zip, and street address where the headquarters of your business is. So as we move into the financials, again, most of these are going to be found and on standardized tax forms. So you want to have your tax forms handy from the previous 3 years, and then we'll do some supporting estimates of the current year we're in as well. So again, these are typically found on your tax forms, and then we get into some balance sheet items here as well. So you want to have current financials as well. If that's a place where you're needing a little bit of help, just ask as well, or certainly if you've got a good relationship with your bookkeeper or CPA, inquire with them as well. But if you find it easier to work with me, I'm more than happy to assist as well. But again, these are pretty much standard financial terms that you'll find on standard financials, profit and loss, and statement of cash flows, balance sheet, things like that you're probably getting readily, hopefully monthly, or at least regularly from your accounting professional. So one thing that many folks struggle with, and it is not a standard figure that you'll probably have available to you. You may have to do some figuring or work with your accounting professional. Long-term eBITDA margin. So eBITDA is a performance metric measuring a company's profitability from operations. So it sort of takes all the other factors out that might contribute to profitability. And then the long-term piece is we're going to roll up the previous 5 years of revenue and divide eBITDA by that sum of the previous 5 years, and that should give us a percentage. It's probably, a lot of businesses come in around like 10%, 15%, somewhere in there. Sometimes it's much lower. Sometimes it's really close to zero. Sometimes it's even higher than what I said too, but it varies. But that's sort of a measure of profitability from operations combined with the long-term kind of the staying power of the business. One of the things that we see is the longer a business has established itself and established a track record of performance, that's an important thing in the valuation of a business. So percentage of business recurring, so the same client coming back again and again for a purchase of product, or some sort of, if you have like a monthly subscription kind of a model of business, things like that, that's where we want to make sure we know what kind of percentage of your business is happening in a recurring fashion. So As we move through here, these are generally estimates. These are some of the intangibles that are recognized in the value of a business. Specifically, uh, most of us understand the value of a business that's not dependent on a key person, specifically somebody in ownership. If that person is able to step away and not impact the business, obviously that's a positive, and so that's something we want to measure and account for. And uh, as we move through the rest of these, it tends to be accounting for how the business is run, if it's handled in a physical location. So we'll look at that, and of course that does contribute to it as well. So if you own or if you rent, if how the ownership of the real estate is, and if the company itself benefits from that in a kind of a lease back to a related entity, that does affect as well. So that brings us to the end. It's 8 sections, but hopefully most of this information you have available to you. And if you don't, that's a good place to start now and identify where we come up short. If there's some gaps in the data that's missing, this is a great time to identify those, and let's get those things shored up, and then we can proceed on with the valuation itself. But that's sort of a hidden benefit of doing this process as well. You might find some places you weren't aware that you you had some gaps in the data you have in terms of the financials and the facts and figures about the business. So, thanks so much for taking the time to do this. It's time well spent, and I am confident that there will be a supreme return on the investment of that time.